Hi, everybody. It's Stacey Soble with Salon today, and I am here with Brian Beaulieu. Did I say that right? I
You
practiced
did.
a little bit. Who is a CEO and Chief Economist of ITR Economics. And you are going to be a keynote speaker at the ISBN conference in Coral Gables in April 23rd through the 25th, and kind of giving an inside look at what we can expect for the economy and how it will impact the beauty industry. So I think that the world has a lot of questions for you, Brian. And I know that a few years ago, your twin brother who works with you, Alan, presented at ISBN, and he had a nice picture of growth and prosperity for the next 10 years. And then something unexpected called the pandemic happened. So I think that threw a wrench in everything. But when we turn on the news today, they're talking about rapid inflation. They're talking about recession. How would you describe our current economic state right now?
Tumultuous, precarious, and full of misleading headlines that make it very difficult for people to know what's going on, which is one of the things I appreciate about you doing this interview, is that people have an access to some unbiased and unvarnished data. We're still dealing with the pandemic, Stacey, in that the inflation that you just touched upon, that's the direct result of what our fiscal policies were during the pandemic and what the Federal Reserve did during the pandemic. And the supply chain shortages were part of the pandemic experience. Right. So all of that is still normalizing through the economy, and we're dealing with the consequences. The Federal Reserve is making things worse by ramping up interest rates, almost 500 basis points in the last year, which is a crazy amount of rise. And then they're surprised when a couple of banks failed and people get all sort of shook up. And I'm sure that's going to be on attendees' minds also when we meet in Florida. They're going to want, what does this got to do with us? Is this a systemic bank failure like happened during the Great Recession? Or what does this mean for our industry? And how are people going to react? And what's it mean for the beauty industry? All of those things have to be worked out. Let me give you a calming note, though, right away, if I may, Stacey, and that is...
I love a calming note because that was all very frightening.
We don't view this as a systemic banking problem. There have been two failures. One was SVB and the other was Signature. Both had unique characteristics. Unique implies that they were only one-offs. Now, there are other banks like SVB. They had a poorly designed plan for dealing with 2022 and into 2023. It was poorly executed. I'm sure there are other banks that had bad plans and poorly executed. And the bottom line is who on this planet didn't know that interest rates were going to be on the rise, and they made the exact wrong decisions under that set of circumstances. At ITR, we have our own ITR optimizer methodology for knowing where to invest, and we knew to stay a football length away from stocks like that. So it's not surprising that the weak ones are getting picked off. Credit Suisse yesterday made the news, and they required a 50 billion bailout from the Swiss central bank because they were also a weak bank to begin with. So the weaker banks not going to fare very well. The strong banks, they're going to be just fine. And it's not that hard to separate the weak from the strong. The other part of all this, and this is another good note for you, is that the Federal Reserve decided on last Sunday that all deposits would be guaranteed, not just up to 250,000. We economists call that moral hazard or moral risk. We're teaching people that they don't have to be smart about their money. We're teaching them that when things get really bad, government will come to our rescue. Yeah, and it just makes people more dependent on government, which is part of the moral hazard of it all. But it worked in 2009. It stopped the fear from spreading in 2009, helped people calm down, precluded more bank runs, like we saw at Signature and at SVB. So those two factors combined make us think that this is not systemic. This is a couple of weak banks, and there might be a couple more that need some infusion of capital, like First Republic did. I mean, they got a huge infusion of capital, and they're going to be fine now. They don't have to declare insolvency or anything. So we're going to have some more of those. But overall, what we're looking at is the consumer is right now fundamentally good. The balance sheet is good. It was great a couple of quarters ago, but the consumer is still making more money than ever before after adjusting for inflation. They are more in debt, but they can still handle the debt. That's what we look at, whether they can handle the debt, and they can. So that tells us more money handling the debt. They're going to continue to spend money where they traditionally enjoy spending money, and that's the beauty industry. I don't know that I'd want to be selling, purely discretionary items. I wouldn't want to be in the pet rock business right now, but to help people look good, yeah, that's a great business to be in.
So, if someone's looking to put their money in a bank, where right now are you advising companies that work with you to put their money? Like, what do you look for in a bank to be?
I look for a bank that has a well-balanced loan portfolio. That was one of Signature's problems. It was very centric in a small area. IVP rather, also was very concentrated loan portfolio. And they were industry specific. The best banks are those that have lent money to Main Street USA, not tech, not crypto, not a very specialized area, particularly one that's been getting a lot of bad press lately.
Right.
The other thing that we encourage them to look at is, and if it's a publicly traded bank, you can discern this data. Are they heavily invested in bonds? And if they are, that's not a bad thing into itself, as long as they are overnight, 30 days, 60 days, maybe 90 days. You certainly don't want to be in bonds beyond 90 days if you're a bank. So, I mean, those are the big tells, whether a bank is healthy or not.
So, any idea how long it will take us to normalize from the pandemic? And I imagine that depends on what the pandemic does as well, and if there are more outbreaks, and if they continue to be weaker in the virus, or if we have to face another thing like we did before.
I think the normalization from the pandemic will largely be behind us as we cruise beyond 2025.
Okay.
The reason I hesitate to lay down a mark like that is because the pandemic has changed the way government is behaving and the way the Federal Reserve is behaving. So you can make the argument that we're going to live with that pandemic-induced change for a lot longer than that. But that'll be because of the humans involved. It won't be because of the virus.
Right.
It'll be a human response to the virus at that time.
Now, the beauty industry loves to say that it's recession-proof because people will still continue to get their hair cut. And we saw with the last great recession that has an element of truth to it, but they will stretch out their appointments. They'll come in less frequently. They'll spend less money. What is your view about the beauty industry and the service-based industry, and how it will weather the next few years?
I think you summed it up very well. The higher income level, this is very much a bifurcated scenario we're talking about for the next few years. So the upper income levels, the luxury level, they're not going to feel it anything. But below that level, when you start dealing with normal people, whatever you want to define normal people like, they'll start to potentially stretch out. I think tips get a little bit lighter. Also, if the stock market isn't doing well and the stimulus money's run out, tips tend to get a little bit lighter also as people get more concerned about inflation, that sort of thing. Right. But overall, the industry does fine. The danger in saying that the industry will weather the storm is that that's on an average, right? There are certain salons and individuals that won't make it because of their geographic location, because of their market mix. But the industry as a whole can behave relatively well.
And we saw that coming out of the pandemic. We definitely lost salons, but then we had other salons that picked up a lot of their customers and did very, very well and had kind of explosive growth last year. So I think you're right. It's going to be depend on where you are and who you cater to and what your mix is and how you manage that. So. I
think as we age as a population, I think hair coloring is going to be a thriving business going forward, Stacey, as will skincare products.
And we're seeing that, and that's a large reflection of people wanting to stay in the workforce longer and compete with the up and coming generations and to continue to look good. So, and you know, the beauty industry, even though you're paying for a service, it also is a cathartic thing that makes you feel good about yourself. So it's always
absolutely, and that's an important aspect of it. It's really an experience rather than just a transactional service, in my opinion. Yeah, or at least it should be an experience.
It should be. You're absolutely right. So ISBN is an association that caters to multi-location businesses and franchises. What do you have different advice for them than you would like a solo salon owner, independent mom and pop shop?
I don't know yet. I still have more research to do between now and the event. So it'd be premature for me to answer that at this time.
Okay. Well, we'll look at the conference then and see how you address those members in specifics. So, Brian, thank you so much. We look forward to your presentation at ISBN and learning more about the economy and the future and what it holds for all of us.
Well, thank you very much, Stacey, and I look forward to seeing you.
Thank
Take
you.
care.
Bye-bye.